Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the sellers have been a bit more dominant, and ES actually tested below yesterday's RTH low of 71.75. But bigger picture, this is still a more bullish market, and responsive buyers can be active on pullbacks into support. And we have to be careful shorting the market at too aggressive of a price. The only time it would make sense to take an aggressive short is if things were looking extremely weak in real time and there was a lot of downside momentum. So it would really be a momentum-based trade. Location would be poor at that point. So off the open, we're going to be watching 71.75 and 67 to 69.5 because those are still spots where buyers can defend, and from there we can get a move back up into the previous VPOC and close at 76 quarter and 76 half, which is a short-term inflection point, and then beyond that 79.75 to 81.75. And in order to break out, or at least sustain a breakout above initial resistance, we will have to see broad market strength, participation from the other markets, and some pretty decent upside momentum. And if we can get that, then we can get a move into the 86 to 88 and possibly 92, 94. But as we head higher, we are testing larger time frame resistance zones. So keep in mind that even though short term the buyers have been dominant and in control, as we start heading higher into 86, 88, 92, 94, and especially 98 half to 2100 half, we are testing some really big areas of resistance, some fairly strong areas of resistance, with 2100 being the all-time high. So as we head into those zones, it's very likely that responsive sellers will be active and we will get reactions at those zones. So as we proceed to test those higher zones, we have to be more careful with any long setups and consider shorting those zones as well. On the downside, if we break the 67 and 69 half short term, that would tell us that sellers are perhaps being a bit more aggressive, and it doesn't mean that buyers can't be active at support, but then we do need to assess the market in real time to kind of make sure that the selling is kind of flushed out and the market is exhausted into a zone before we fade it again. But buyers can still defend the zones below. The 56.75 to 58.75 is a very good area of support, pretty much an automatic buy in most scenarios. Below that we have a gap and naked VPOC at 55 quarter to 55.75. It's still an area that can be tested and it can attract buyers. 49 half to 52 half is a bit of a range extreme, but it would be a very good spot for responsive buyers to step in. But in the event of any pullback, our plan is going to be to look for long setups at the key zones. And like I said, 56.75 to 58.75 is a very high odds area for buyers to be active. 61.75 to 64 quarter is going to be a bit of a judgment call in real time, depending on how the market is approaching it and where the move really started into 61.75 to 64 quarter. So as long as the market is even short-term exhausted by a little bit, it'll be enough to attract buyers. But if we've been balancing at 67 or 69 and we've been building a range over there, and then we break down into the 61.75 to 64 quarter, then we'll have to be a little bit more careful and exercise some caution. But if we are going straight into it, and it's a 8 to 10 point move, because this is a lower volatility environment right now over the last couple of days, then that could be enough of a reason to take a fade at the 61.75 to 64 quarter and look for a move back into the 67, 69 and beyond, so into yesterday's range. And then 56.75 to 58.75, very good spot for buyers to be active, and 49 half to 52 half is an extreme. Most likely we will not get there, but if we do, that would still be a good spot for the buy side to be active. So off the open, we're still favoring the long side, and like I said, we would have to see some fairly decent downside momentum in order to consider any short setups. In this environment, given how bullish it is, even though sellers can technically step in because we're testing bigger areas of resistance, on the smaller time frames you still want to get fairly good trade location. in order to allow that short setup to really play out. I think that if you're taking very aggressive location on the shorts, you're not really going to have the staying power to see that trade through. So just be a little bit more cautious on the short side. And if you are taking an aggressive one, just understand that it's from an aggressive price and manage it accordingly and make sure that you have that sustained downside momentum on the NYSE tick, really supporting that trade idea. Otherwise, the larger time frame buyers can really step in at pretty much any zone. So right now, we are still going to keep our focus much more on the long side, be more cautious on short setups. Doesn't mean that we can't short the market, but we have to see some pretty clear reasons in real time, and we still have to get good enough trade location to really be able to see that trade through. So those are really the main ideas heading into the open. Let's see if the buyers can really hold this market up above 71.75, above 67 to 69.5. That'll help set the tone for the day, and we'll take it from there.